Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepho, Modiba, and thanks for joining me. Tonight, I'm joined by Tim Nhamo, Director at Global Financial Innovations. Tim, thank you for joining us again on the show.
It's always good to be here.
Let's start out with a quick recap on September last year. It feels like a lifetime ago. Certainly in financial markets, in terms of global macroeconomics, geopolitical landscape, a lot has changed. Where were we in September relative to where are we right now?
Okay, back in September we were generally positive on Africa. We still are. In general, in terms of just looking at where our advisory picks were we were a little bit bearish Nigeria, which turned out to be a great call. The big surprise was Mozambique. I mean, at that time they'd been going through issues with what they'd done with IMF loans and so on, and audits and so on and so forth. The Mozambican medical appreciated quite significantly, which was a bit of a surprise. And Ghana was a little bit of how can I put it? Was a little bit of a fringe one, and we were bullish local currency and local currency exposure, and then things tended to weaken a little bit.
Looking at the global picture, there seems to have been, I guess, a movement back into emerging markets broadly, and specifically on the fixed income side, we've seen actually a narrowing of yields to a certain extent. What has been the picture on the continent? Have we seen that follow through into, as you've spoken about, different markets on the continent from that perspective?
Well, yeah, the yield for the hunt for yield is still very, very strong. You're seeing it on both local denominated debt and on offshore debt. Just to give you an idea, I think it was Senegal did a Eurobond, and I think at the old one that they did was at about 8.25. Right. And this time around, it came through at 6.25.
Wow. Okay.
So that's quite a lot of coming in on the US dollar side.
Sure.
And then you've now got Kenya looking to issue. Cote d'Ivoire might also issue as well, and they're looking to do a fairly substantial side, sort of 500 million and $1 billion and up.
Okay. So, I guess what's the current picture? What are the concerns? What are the risks relative to September?
So where we are now is again, the outlook is still bullish. The difficulty now starts to come in. It's got less to do with whether or not countries or currencies are particularly good or bad risks, but more just a lot of the positivity has been priced into the market.
Gotcha. So it's a valuation risk rather than Okay.
So for example, if the Mozambique is still a good bet,
right.
But and they look to be getting about $8 billion worth of gas investments. But at the same time, if you now want to start doing a trade, a lot of it has been factored in. So you've got a currency that's already very strong, and yields have come in. Okay. So yeah, it's a good place to look at. But how do you position yourself?
I guess in terms of outlook, what's driving your currency views? You touched on Mozambique and a strengthening currency. Is that likely to continue? And what's gonna inform that deliberation?
A lot of the currencies is really relative to local growth and local economies.
Right.
At the same time, one could argue, over the last 6 months, what have we really seen in terms of what's been happening with the US dollar? You could argue that the Trump effect hasn't been that great for the dollar, although in the last, call it 2 to 3 weeks, we started to see a revival in the dollar across the board, and also in the US dollar index. So it's very difficult to sort of get to ascertain where your exact equilibrium point is and where you're going forward. So again, we would look to still invest in a number of places. It's just now, for example, if you use South Africa as a parallel. So the first time the finance minister was fired, the rand weakened dramatically, and then each time there's been a bit of political turmoil. After that, everything has stabilized. So could you look at it? Could you look at the US in the same view and say, well, in the beginning people were worried about Trump and Trump's tweeting, and then does it come to a point where it starts to be ignored? And then to that extent, you now start to see if there's a settling down on the American side, you now start to see slightly less in terms of risk appetite on the African continent.
Okay, let's get country specific.
Yeah.
You were definitively a Nigeria bear in terms of the fixed income
Yep.
space last time we spoke.
Yep.
Where are we now in terms of Nigeria? What's informing that view?
Nigeria still has a currency supply issue, so you've essentially got your official rate, which was weakening.
Mm-hmm.
You had the rate called NIFEX, which was what the financial instruments are settled against. They've now introduced another one called the NAFEX, which is pretty much the anybody's rate, and this was to accommodate issues with the black market.
Mm-hmm.
So we still bearish Nigerian naira, and would sort of look to, you know, if one of what we think would be a very good play is if you can structure something around the NIFEX and NAFEX converging. So that's basically as call it the official financial rate closes its gap with what you'd call the black market rate, or the proxy for the black market rate. Yeah.
Okay, so that's on the currency side of things. In terms of the bond yields, where are we looking at? Local currency, and I guess dollar denominated.
Yeah, the dollar denominated. Yeah. So the unfortunate thing there is that, you know, sort of regardless of what your local yields are, it's very difficult from an offshore perspective to make any money out of that if you've got currency. So it becomes a lot easier to say, you know, do an NDF play and trade the right hand side. So you basically are buying, you're paying the yield obviously because the forwards are at a premium to spot. So the yield that you're paying, the differential between spot and the NDF rate represents the cost of borrowing. Right. But you essentially are betting that the currency will move faster than the cost of borrowing. Okay.
Yeah. Elsewhere in West Africa, let's stay there. Ghana is another market we spoke about last time. Where are we now from a Ghanaian fixed income space?
Ghana is a bit 50-50, but unfortunately now also the cedi is starting to run as well. So we're a little bit bearish on that, and would prefer to, you know, either look to try find local yield if we can. If there are opportunities to sell rallies on dollar Ghana, otherwise overall it's bearish on that.
So to rephrase, so given the rally in the currency, you're concerned that we might see a pullback in the short term? Well,
you use the pullback as a how can I put it, as a buying opportunity. Okay. So if you figure that the currency is too relatively weak given a point in time, then you can take a little bit of onshore exposure. But generally speaking, if you look at it from a slightly longer term perspective, would be bearish the currency, therefore stay away from local yield.
Okay. Anything else in West Africa that's interesting or is catching your attention right now?
No, not specifically. Again, the focus is more on East Africa.
Right.
Kenya has elections coming up in August, so the Kenyan shilling is weakening a little bit. But generally speaking, we've always been fairly bullish on that one. Uganda, the currency situation is a little bit weaker, but we also like the local yields in Uganda. And then what's sort of colouring the Tanzania picture is sometimes the opportunities to structure Tanzanian investments through Kenya. But again, if you've got a weakening Kenyan currency, then it takes the shine a little bit off the...
Let's stay with Kenya for a little bit. How much does a lack of or a heightened political uncertainty factor into your decision making? Are you almost discounting any potential political changes in your assessment of fixed income space there?
No, we're not really expecting anything in terms of political changes. It's just normally what will normally happen with the vast majority of African countries is running into an election. Monetary policy tends to be a little bit looser because the government is spending money to keep the masses, with populist policies and so on. That can tend to be slightly inflationary from time to time. Right. And then also you don't want that money ending up filtering into, for example, say the forex market, because then that starts to push up the rate. So overall, I mean, we're not expecting any drastic changes. It's just the movement in the currency starts to eat away at your local yields a little bit. So is there a temptation then to be underweight until the elections are concluded? Somewhat. So relative to, say, 2-3 weeks ago, I would have thought, no, it's not a problem. Just go in and do the infrastructure bonds because they're the most tax efficient from the the fixed income space in Kenya, whereas now, because the currencies run a little bit, it's taking a slight step back. Not that we don't like the picture. It's
right.
just, okay, you know, between now and August there might be a little bit more of a political impact. The politics might affect the scenario a little bit more than initially we had thought, say, a month ago.
Okay.
Yeah.
And the picture in Southern Africa, is there anything in Southern Africa that looks interesting from a...
Well, there's Zambia. Zambia looks fairly good. I mean, they're probably going to be getting about 1.8 billion from the IMF.
Right.
Currency stable. Yields have come in a little bit since September when we spoke. And yeah, so overall that's okay. Mozambique again, things have improved drastically. In terms of finding an opportunity, though, it's a little bit difficult.
Let's stay with Zambia for a second. Naturally, the currency is very geared, or it leans quite heavily on the copper price, the underlying copper prices. Is that one of the considerations that you factor in your assessment of whether Zambia looks great right now, or is there an anticipation that the volatility associated with the copper price is partially removed given the structural changes that are happening in Zambia? I
think it's more that it's less an issue of the copper price volatility, and more that a lot of income had started coming in. When we spoke in September last year, it was sort of pre that stage, and we were expecting an improvement on that side. So in terms of sort of mining production and mining output and that sort of thing, that effect has come in and has stabilized, and we expect it to continue. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepho, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.